Hey, Kevin here, top 100 financial advisor, two-time author, and one-time bestseller. And today we're going to talk about the stock market, particularly cheap stocks, because when the economy is like this, we say buy low, sell high, which leads many new investors to think, well, hey, let me go buy a Ford, let me go buy Macys, let me go buy JCPenney's, let me get anything that's cheap. Maybe that's $5 a share, maybe that's even lower. Let's talk about that and what that means as an investor and whether or not that's going to be a good idea for you. Now, if you've been watching here, whether it's on Facebook or YouTube or elsewhere, you know that I've discussed before that not every stock is down because of the coronavirus. Not every stock is down because of sales. Some stocks are just bad just because others have been bad for a while. So I want to discuss one of the most recent stocks that have kind of fallen off. So follow me here over to CNBC. CNBC is one of my favorite sites to just understand the market and kind of get a sense for what's going on in the world of investing, at least at the moment. So this is Macys. They're at a new 52-week low, which means that the last 52 weeks, this is the lowest that they've been. For this particular stock, this doesn't really mean anything. Some people think that, oh, it's 52-week low, a 52-week high. I need to buy or sell based on that. Not a big fan of that at all. Anyway, you see here that it was $4.58 per share. It was up 3.39%, which is all fine. But if you look here over the past 5 years, it has pretty much been down consistently. Again, that's not, it's cheap. You can get a bunch of shares for just $5. That doesn't really mean anything to you or for you if you're looking to invest for the long term. The other thing is when you buy a stock, you need to think like a business owner. You own the entire business. How is the business doing? Overall, unless you're Walmart or Target, the retail space has not been good. It hasn't been kind to Macy's, hasn't been kind to JCPenney and other big players that were primarily in malls. So you have to think about these things as an investor. Just because it's cheap doesn't mean that the business is going to do well. We also know, we'll go over here, also on CNBC, that they are going to be replaced on the S&P 500, meaning they are no longer one of the 500 largest companies in the United States. That's not a good sign. So they're going to be replaced by, looks like, Carrier Global. And these things have been happening before the virus. So again, you can't just jump into things blindly just because the price is low. The price doesn't tell you how great the company is or how bad the company is. So these are things that you want to pay attention to before you jump into anything. And lastly, I want to show you the Instagram page, the Building Bread Instagram page, because we brought up something very similar here. You move this over. You check the date. This was December 29th. Down here, 2019, and this was JCPenney. JCPenney was one of the worst stocks of the entire decade. The entire decade, you put $1,000 in it, you would have only had $36, and it's probably even worse right now during the virus. Again, you have to ask yourself, what was the company doing before the virus? And you can see with JCPenney, over the last decade, they haven't done well. So just because it's cheap and now even cheaper doesn't mean that this is time for you to jump into the market. So all of these things you want to pay attention to, you want to understand the business. Don't just look at a price and just go get it for the price. There's a lot of other things that you want to understand. How healthy are they? Are they growing? Do they have a way to move forward? Is it the virus that's dragging down the cost or the price? These are all things that you should know before you jump into any investment. But primarily, if it's $5 or lower, I'm usually going to stay out of that because there's a reason why. Would I buy a MacBook for 99 cents? Probably not. Am I going to buy a house or a car for $1? Probably not. So when you start to ask yourself, would I buy a business or a stock for $5 or less? You want to be a little bit worried about that. If it's above that, you still need to ask all these questions. Even if a stock is $100, I'm going to ask these questions. But when it starts to go below 5, you're in the penny stock territory. It gets real sketchy when things get below that dollar amount. So you want to ask yourself these questions and play it safe. Just because it's cheap, just because it's quote unquote affordable, doesn't mean you need to jump into it. If you want tips like this, make sure you go to buildingbread.com/free. That link is in the bio. Make sure you share this, and I'll see you guys later.